Good evening, friends. Hope you all are well and doing fine. I am Ashok Kanawala. On behalf of HDFC Mutual Fund, extend a warm welcome to all of you to discuss this call on our forthcoming NFO Transportation and Logistics Fund. With me on this call is Priya Ranjan, the fund manager for this call, and my colleague Amay Devulkar, who is a product specialist for this call. Before I hand over to Priya Ranjan, let me set the background for this call. At HDFC Mutual Fund, we believe there is a fundamental shift in our economy. And when I say that it's what already well documented in terms of numbers, our economy continues to grow at the fastest pace among the larger economies. We have moved to fifth position. Sooner we go to third largest position. And over the last couple of years, for whatever work the government has done on the policy front, on the execution front, those changes are visible before us. And therefore, we believe that we are at an inflection point as far as on the theme of transportation and logistics. And when we know that the passenger vehicles is a very high on aspiration of every Indian, it's an aspirational item. It's no more a luxury, right? And despite that, in the 140 crore population, if we see today the passenger vehicles sold are roughly around 4 million. That is around 40 lakh cars. We also believe that because of this per capita moving from $2,000 to $5,000, the demand for passenger vehicles also will improve. But what is more important is the work done on the infrastructure side. We know that network of roads that have been built over the last couple of years, and recently now Mumbai-Delhi corridor also will open. So you have Mumbai-Nagpur, you have some couple of expressway opened in Uttar Pradesh and so on and so forth in other countries and the other states, sorry. And on the railway side also, we have dedicated freight corridors operating for the goods passengers that are running between various cities. So these are the changes which are visible to us that we are seeing, but the opportunity also comes with such kind of changes that are there. And we are trying to capture those kind of opportunities. And therefore, we are coming out with this kind of sector thematic offering so that people who want to identify can visibly feel that there's an opportunity in this sector. They can pick and choose those opportunities and consider the investment. So with this logic, we are out in the market, which will begin next week on Friday, the Transportation and Logistics Fund. And as I said earlier, Priya Ranjan is going to be the fund manager. About Priya Ranjan, he has been with us since 2020, over 3 years. And he has a total experience of over 15 years in equity research. And he's a sector specialist. He's been researching the companies forming part of this transportation and logistics sectors. And therefore, we thought that he was the best guy to manage this fund, given his deep expertise in understanding this sector. And therefore, without much ado, I now invite Priya Ranjan to share his initial thoughts.
So thanks, Ashok bhai. So you have rightly set the tone. I mean, when we talk about this theme, I mean, this is a theme of themes, and this is a theme of multifaceted dimensions in terms of economy. So when we talk about Make in India, when we talk about China Plus One, when we talk about 10 trillion economy, I mean, all these aspiration of India, I think this is one of the theme which will set the tone or will be one of the key beneficiary in terms of when we move towards all these goals. So what this fund offers, or in terms of what this fund is actually giving an opportunity. It's a multi-segment fund. I mean, there are multiple sectors, multiple sub-segments, which provides a pure diversified portfolio opportunity. And this is not only automotive. This is part of airport. This fund, I mean, the opportunity size in airport, airlines, shipping, ports, railways, as well as logistics. And part of logistics is also capturing e-commerce, rail, air, cargo, plus the back end of the logistic like supply chain, warehousing, etc. So I mean, so given the size of the economy as we move forward, I think all these sub-segments will keep growing, and there will be a multiple growth opportunity, and there will be sub-segment opportunity as well. So we have like opportunity in terms of organized to unorganized, lesser penetration to higher penetration, as well as aspiration of consumer. I mean, from this fund offers, I mean, the opportunity in terms of multiple segments where we can straddle across from consumer in the luxury segment to the mass kind of segment. And as we have spoken, that this is also a theme within themes. I mean, so you will also understand, I mean, this entire theme have a varied business cycle. Where we will see that a structural growth story is there. You have a cyclical investment opportunity, and then there is a diverse consumer base, which I was talking just now. So the segment have, I mean, there are multiple segments, which, I mean, the universe straddles from luxury to mid-market to economy. And this segment is also going through disruption and disruptive innovation. Plus, so there will be disruptive innovation and emerging technology play as well in this. So we will have an opportunity with the new age technology, and the technology. When we talk about disruptive innovation and emerging technology, so that also gives an opportunity for the existing player to make their mark in their market share, make their mark in terms of their greater share of the pie. So it may not necessarily that the I mean, existing players cannot do or will not do the innovation in their field. And when many of these emerging technologies are coming out of the consumer preference, so as we will go through the presentation, you will understand and you will see what we are talking about in terms of that. And then there is a various business models. So you have the brand ownership, you have the contract manufacturing, you have the outsourcing. Outsourcing, when we are talking outsourcing, so outsourcing of component manufacturing, outsourcing of in terms of logistics, outsourcing. And then you have a matured businesses plus startup ecosystem as well. So it's a mix of mature, high growth and mid growth companies, where when we talk about the mature businesses, which are high dividend yield companies, and there are companies which are long history of operation, and there are startups which are or the mid-age companies which are growing at a very rapid pace and a faster side. And then they are at an early stage of cash flow generation. And then you have geographical. I mean, this theme also provides the geographical diversification. I mean, we often talk about the theme of like rural consumption, urban consumption. I mean, this theme have both rural, urban, as well as domestic and export, because a lot of companies in the auto ancillary space and all, even the auto side, there is a lot of export potential and export happening in this segment. So now coming back to the key drivers of the transportation theme. So as Ashok Bhai already said, I mean, the mobility tailwind is going to significantly increase because, I mean, our demography is very favorable. Our economy is growing, and we have one of the youngest population in the world, and we have the rising per capita income. So all this will have a confluence of event will be taking towards greater need of mobility, faster need of mobility, and that is one of the key tailwind for the entire industry or entire, I mean, the economy. So just, I mean, just to and this is what is happening in this space is actually this is leading, rising income is leading to premiumization as the consumer aspiration is growing. So so right now the consumer is prioritizing their consumer experience over the cost of I mean, the cost of operation or the cost of ownership only. And then, I mean, we have also talked about, I mean, the innovation, decarbonization and safety theme, which is the global aspect of the ESG, which is playing into this theme as well. So, I mean, the government of India has already declared their net zero goal by 2070, and transportation and logistics side segment will have one of the key reason, I mean, the key driver for to achieve that net zero goal. And similarly, I mean, transportation, when we talk about transportation, there is a safety, which is the sustainability part, is very much often in the news items, because we have one of the highest road fatalities as well as trade accidents, etc. So that's why the government is very keen to focus on transport safety as well as improving the infrastructure in all these segments. And similarly, I mean, when we talk about manufacturing, make in India, I mean, this segment is roughly, as of now, contributing auto and auto comps when we're talking about around 49% of the India's manufacturing GDP as of now. And that's where it's reflected when the share of PLI announced by the government, the share of this segment or this industry has been second highest in the overall pie of the announced PLI. And because of the sheer presence of sheer scale of the operation of manufacturing for the auto and auto ancillary, the government's target has to be, which is around 25% of the GDP, has to be achieved. Then this segment has to fire all cylinders. So then coming back to the export opportunity, and do you know? I mean, India is one of the largest two-wheeler two-wheeler exporter with around 17% global market share in export terms. And the government aspiration in their national mission plan of automotive was to increase 5x export of vehicle as well as 7.5x export in terms of auto components. And then we are, I mean, as we have seen, I mean, the government is focusing a lot on infra, expansion of highways, railway, airport network, etc. So that will be one of the key tailwind for the entire sector. I mean, the entire theme, not only on the transportation side, but as well as in the logistics side. So what is driving this? One of the key aspects of driving this is actually the government is, as of now, our logistic cost is roughly around 14% of the GDP, while the global average is around 9%. So the government wants to bring down to less than 10% by 2030. What will this do? So this will increase our competitiveness, our ease of doing business. And just imagine, I mean, 4% reduction in the cost of logistic will it will open up around $230 billion of opportunity for the overall economy. And that can be deployed for more productive as well as more growth-oriented segments. So these are the themes. So now coming back to the mobility tailwind, I have already discussed around demographic dividend. We have one of the youngest population and as well as aspirational population, which is growing. And as we go in terms of along the path of demographic dividend, I think we will be we will be in the requirement of more of a transportation, whether it's on the passenger side, to passenger car side, two-wheeler, metro, railway network, etc., airport, I mean the airlines, etc. And what will drive this? I mean, when you look at the penetration of all these segments, I mean, majority of the segments in the auto side, so whether it's a two-wheeler, passenger car, or even in terms of farm mechanization, while we claim that we are the largest manufacturer of tractors in the world, but in terms of per capita, per hectare, per horsepower mechanization of farm, we are at the lowest level. And one of the reason is in the bottom chart, you can see that there is around our employment in the farm sector is very, very high, which is actually, we often are hearing about the labor shortages in the various segments of the farms and various states of the farms. So I think this will keep driving the penetration as well as mechanization of the agriculture side. Similarly, I mean, the two-wheeler, if you look at the like-to-like, the like-to-like markets, so our penetration in terms of two-wheeler is very, very low when we compare to the similar like-minded or the similar kind of economy in the Southeast Asia or the Eastern Asia. And when we talk about penetration, I mean, the Ashok Bhai has already initially said, I mean, when we are at around 28 per thousand in terms of penetration for passenger car, and global average is roughly 150. Even if we have to reach global average, then our volume has to be around 5 to 6x from the current level, which is where the China at this point of time is. And one of the key theme why this will happen is our per capita GDP has been around 2000, and similarly the China's per capita GDP was around 2000 in 2003, and at the same time there has been significant boom of automotive market and the passenger car market in that areas in that country. So I think we are on a very sweet spot at this point of time where we can rise significantly in terms of aspirational product as we have talked about. And the one key theme or one key thought in the investor's mind, on everybody's mind, is what will happen to when the EV will have. EV will happen to in the entire segment. So what I see is actually EV is not a threat, but it's an opportunity for the entire segment. Because if you look at the opportunity size or the life cycle cost of a vehicle, around 60% of the vehicle, I mean, the operation cost is going into the fuel over a period of your ownership. This will move back towards the auto industry as we move towards electrification in the battery side. So I think the battery cost will, and so the value addition or the value capture by the overall industry will significantly enhance when we move to the new age economy or the new age mobility solutions. And what will give the advantage? I mean, for the 100 years, the Western countries as well as the Far Eastern countries, companies have a very high advantage in terms of their engine development and all. But when the BEV, everybody is actually on the clean slate, and everybody is will be have the similar kind of advantages or disadvantages. So this will open up our avenue, our company's avenue in the global scale, and our opportunity size in the global automotive market can be significantly higher in terms of export potential, not only for the vehicle side, but also in the component side. So we have already discussed about the higher wallet share as we move towards more BEV and moving away from the fossil fuel side. And not all the component, I mean, there has been always a talk about what will happen to the auto component industry when this transition will happen. And the transition is not also going to be very, very gradual. So what we have initially, I mean, what we have thought about is at the current level, most of the vehicle is at the gasoline or the diesel side. In the next 8 years, it will be gasoline, diesel, flex fuel, ethanol based, or even battery electric vehicle, hydrogen ICE, as well as CNG. And beyond 35, it will be more driven towards the battery electric side, as well as the hydrogen fuel cell, depending on the class of the vehicle. So what will happen to the auto component side? There will be some component loss in some of the segments like transmission on the engine side or the exhaust side, but there will be a significant increase in the opportunity for the batteries, electronic component, thermal management, power electronics, etc. And when we talk about the innovation, I mean, the innovation is not only limited to the class of the change or the energy change. Innovation also happens in the vehicle features, vehicle connectivity, and vehicle features. So innovation, what we are seeing is the government focus on regulation is, or the safety of the vehicles is actually increasing the penetration of many of the premium features. Like, I mean, now we have a 100% dual airbags in all the new cars. I think the 4 airbags will be also mandatory, and the 6 airbags, I mean, the government has, the minister has already talked about in the future launches and at the future date. So similarly, I mean, many of these segments, I mean, you can see many of these new categories or new segments which are growing, as well as increasing the penetration of the premium features, which is leading to the safety and sustainability of the segment. So when we talk about premiumization, premiumization is not only happening only in the consumer classes of the vehicle. It's also happening even in the industrial side of on the business side of the segment. So like when we talk about 2017, we have around 24% SUV market share in the overall passenger car, which has grown to around 51% in 23. But interestingly, if you look at the premium end of the truck market, which was around 40% in 2017, has now gone up to 60%. So it's not only that the only consumer class is premiumization. Premiumization is also happening even in the industrial class or the business segment of the theme. Similarly, I mean, you can see from say 2013 to 2023, very significant amount of shift is happening in the two-wheeler on the premium end side. And one of the key talk about, and when I talked about the innovation, I mean, the innovation is also leading towards premiumization. So as of now, we are around 23% penetration in the automatic car segment. We have around 25% penetration in the sunroof side. Alloy wheel is around 38. LED lighting is similarly at 25. So what we are trying to say is, I mean, as we premiumize, our ASP or average selling price of the vehicle will be keep increasing. So the revenue pool of the entire segment, not only for the auto side but also on the auto component, uh, will also keep increasing. So what we think is this will be a multi-year and multi-decadal opportunity of growth as we move along. So now coming to the manufacturing, because manufacturing, as I have earlier shown, that around 49% of the manufacturing GDP is automotive, and various industry bodies are, has forecasted the manufacturing growth of around 3x in next 10 years. So what will drive, so if this is 3x, the overall manufacturing of the country is growing 3x, then I think the automotive companies as well as auto component companies will revenue share will also keep increasing very significantly, very close or even higher to the 3x growth that has the potential. And that is why, as we have discussed, that the auto PLI and the auto advanced chemistry cells PLI has got the significant share of the government attention in the PLI scheme. So what at this point of time, auto and auto ancillary is roughly 7% of the GDP. Government's long-term target is around 12% of the GDP. So all these are directional what the government is doing in terms of manufacturing growth, and this segment will be one of the key drivers. So when we talk about now coming to the export potential, so export, as we have discussed, around 17% of these are export market share in two-wheeler, but we have a potential of around 3x, as we see many of the industry bodies or many of the research organization has forecasted that. Similarly, in terms of tractors, our global market share is in terms of export is just around 2.6% mark, and which is also growing, is expected to grow in size to around 3x in terms of opportunity size, if we achieve around 7.5% market share. And if you look at the commentary of many of the global tractor market makers or two-wheeler companies, many of them are increasing their capacity in India as their export base. And this is happening not only in these two sectors, but these are just to illustrate. I mean, even in the passenger car and every other segment, this is happening all across the board. Now coming to the, if you infra push, I mean, you can see the table what kind of infra growth or the target the government has set up, and what will this lead to? This will lead to significant growth for the segments like tractors, trucks, and we can see the after effect of like SUV sales, more of SUV sales, because we have a very wide network of so expressway and highways building all across the country. So what will lead to this? This will lead to more transport, I mean, the personal transportation by road, and this will have a more SUV sales. So I mean, this is what one of the key driver also why the SUV sales is happening. SUV share in the passenger car has increased so significantly. And all this culminate into our overall logistic cost going down from around 14% to less than 10%, which is the government target by 2030. So this will have a, I mean, varied impact across all the subsegments of the theme as we play along and as we move along. So all these themes will play on in the next couple of decades. So when we come to now the logistics side, logistics have a very, it's a very, the unorganized segment is still dominating in this space. So I mean, there are multiple growth areas. So shift to organized from unorganized will be one of the key driver. And secondly, why will this shift happen? As India will keep growing in terms of e-commerce and overall GDP. So I think all this is also, I mean, when we talk about the third pillar of this logistic theme, there's a government focus. I mean, when we talk about government focus, you have heard in the various budgets of the government schemes like PM Gati Shakti, National Logistic Plan, Bharat Mala, Sagar Mala, etc. So all these are driven towards reducing the logistic cost to the global average, as well as, and this will only happen if we have a more organized player. So I think this segment will also be significant and maybe one of the very high growth segment for the coming decade and the coming years as well. So when we talk about logistic, I mean, this logistic is, if you look at the bottom left chart, you will see the top 10 companies share in overall logistic market is just 1.5%. While if you look at compared to the China or US, it's roughly 7 to 10% in China, around 15% in US. So just imagine just two doubling. I mean, if the organized share is becomes 3x, 3% of the overall pie, the logistic market or the investable inverse becomes, I mean, the organized segment becomes almost 2x. And as the various industry estimates is also talking significant increase in the e-commerce parcel market, which is more organized as of now. So I think a couple of themes in this segment is like say unorganized to organize as well as the e-commerce growth. So now talking to the investment strategy. So investment strategy for this portfolio, it will be more of a flexi cap approach. And because I mean, this is one segment where you will find mid cap, large cap, as well as small cap opportunity. And because this segment is a very varied sub-segments, so you will also find various leaders in these segments, sub-segments. So we can have a stock selection based on the potential to be leader in those sub-segments or segments, or the current leaders. So I mean, which will have a significant benefit in terms of overall theme of logistics and transportation. So this is the list of universe. I mean, it's around 34 stocks. I mean, the roughly market cap of this entire theme is roughly 30 lakh crore. And when we look at the kind of mixture of the companies, large, mid, and small, I mean, there are, you can see 15 large companies, 21 mid cap companies, and 98 small cap companies. And they have a strong weightage in the Nifty 50 or Nifty TRI, I mean, kind of identical. So this is the universe. I mean, just give you, just look at the industries on the left-hand side. So you have a varied industry like, say, auto component, logistic solution provider, casting, forging, rubber and tires, passenger car, road assets, toll annuity, hybrid annuity, abrasive, bearing, commercial vehicle, two-wheeler, shipping, tours and travels, airlines, airports and air services. So this gives you a glimpse of what can be this. This might be looking at a very sectoral, but I mean, it's not a sectoral. It's a very thematic and very diverse set of exposure to entire economy. And coming to the valuation side, so the valuation of this has been on the long-term average. If you look at, they are roughly closer to the long-term average in the price to earning side, price to book side. They have slight premium to the long-term average, but I mean, that is also reflected because last 2-3 years we have a commodity cost headwind in the entire sector, as well as we have a issue in terms of low ROE because of that, and a couple of years there was a COVID related supply chain issues as well in this segment. So I think as we move along, our the commodity prices eases, the sector ROE will also increase. And as you can see in 2016, 2017, what kind of ROE this segment has generated and what kind of valuation this segment was there. So I mean, if that improvement is happening, then I think the growth will be significantly in the segment. So now coming to the sector return ratio, I mean, any period you look 1 year, 3 year, 5 year, 10 year, 15 year, they have broadly given better returns in terms of the broader index of Nifty 500. And on the right hand bottom side, you can just see most of the, I mean, around 70% of the year, they have outperformed the broader index. So that's all.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.